This is Phoenix Unique. Let's just discuss a little about what's going on generally due to the digestion of the tentative interest rates for the yen, though it was kept at a negative 0.1%, but it was mm, considered good for the yen currency, the Japanese yen. As you can see, we have entered a bearish market structure. I gave a market speculation that was sometime this week in order to see how the market will react with respect to what the market is giving us. And if you look at it very closely from this angle, you will discover that this particular area was considered the seller's territory, and we're anticipating price to retrace to this point and do what? Strike down. So two entries, which is most times, this is one thing I have noticed over time. If price breaks my area of confluence or an area of where I'm looking at area of interest, and it does not hit my TP, there is a high probability of it retracing to that point, and you would notice how when you gauge the momentum of price, you will notice how it will reject or react from here. If the rejection or reaction from here is high, like for instance it comes sluggishly and dumps hard, you would know that the big boys could not fill in their orders, or their orders were not filled depending on the amount they had to sell. So they wanted fair value price, or wanted fair value in order for price to retrace to this particular zone. So whatever one is doing, you ensure that, though due to experience and observing the chart over the years, you would notice that this is an area price would come to act from area 1. Okay, TP can be anywhere above this area of congestion, or where price orders were being digested here. This is where the big boys were building their sell order. Okay, so this is one area price could react from. This is another area. So if one did not enter your sell here, if your sell wasn't filled here and your sell happens to be filled here, you're not still late in the market. This is what I mean. If you look at this very well, look at what price did. Okay, just like we were anticipating. Let me take this down. Okay, yeah, just like we anticipated. So if you look at this very well, you see this is the first point I was expecting price to drop from, which is this. Then if anyone did not catch this, this is another point. And this is the liquidity grab in the what? London Open session, during London Open proper. Everything that occurred here is the pre-London. This is the London section, London Open, and most times you get liquidity grab in order to do what? Fill in the orders of those who want to enter the trade but did not get good price. So this is one. As you can see, price hit the TP. Okay, so this is the potential TP and price marked it. So what I'm trying to say here is that the price will always give you what it wants to give. The point is, if one is placed in the right direction in order to grab what market wants to give. So it's not a difficult thing, neither is it overly speculative. One has to understand, first of all, the market direction. At the point in time we're in seller's market, entering sell at this moment would be pushing the gun. First of all, one has to wait for this candle to close. If you want to scalp, you have to wait for this candle to close in order to check if, okay, this is a support. This bearish candle closed below this support. One has to now wait for the top wick to form on this higher time frame. This top wick will symbolize retracement on lower time frame, but on the higher time frame to be like a wick. Then once price breaks the low of this bearish candle and anticipate more bearish strength. Once it breaks this wick here, we anticipate even deeper what? Bearish momentum. So this is one thing I was looking at. After looking at it on the 4 hours, I was seller's territory. On the 1 hour, all I needed to do was simply gauge momentum to see if price would retrace to my area of interest. And as you can see, this particular place, which is the seller's territory, ST, price retraced to the seller's territory. If the order wasn't filled here, this is a second position. Remember what I said. If price did not hit TP, the probability of it retracing to the point where we were supposed to be activated or filled is high. And once it retraces to that point and it does not hit the stop loss, then we are very sure of what hitting the TP. But get to this point, your profit target is secured once everything that could influence price from going against you is eliminated. One, we are in the seller's territory on the 4 hours and on the 1 hour time frame. Two, this is an area where price was digested, where big boys are filling their sell orders in very, very small quantities so that they don't shake them influence price before they fill in their orders. Then secondly, you see the struggling of price um, trying to digest the orders that is coming in because the buyers are trying to push price up. However, the sellers were also trying to push price down. And what did you see? Voila. This is because of what the sellers overpowering the buyers. This is another area. Now, I would like to go into details what made price to hold here and why we got this rejection here. But to keep this very short and sweet, this is what I was looking at. I believe this London session we have to wait for price to close. The 1 hour time frame has shown a bearish candle close below this support. So what is obtainable is to see some retracement. If the retracement is weaker, then we anticipate first for price to retest this low. If it breaks this low, we anticipate further bearish momentum. I'm going to stop here for now. Don't forget Phoenix Unique. If you have any question, put it down. Don't forget to hit that subscribe button, like, and happy holidays. Bye for now. Peace. Baraka.